Hello everyone, welcome back to this week's Technical Insights. We are now in the middle of October and just about 2 months away from Christmas. But there are still significant events to watch out for, like the US election and the China economic policies, which are expected to bring more volatility as we move towards the end of the year. First, let's look at how the global equity markets ended for the last week. The US markets extended their winning streak for the year as we enter into Q3 earnings season this month. Both the S&P 500 and the Dow Jones Industrial Average surged to a new record high on Friday, and all three major US indices, including the Nasdaq Composite Index, recorded their longest winning streak this year as they extended their gains for a 6 consecutive weeks. The Dow Jones Index gained 36 points or 0.09% to end Friday at 43,275 points. Broad Index S&P 500 advanced 23 points or 0.4% to close at 5,864 points. Tech-focused Nasdaq Composite Index, led by a post-earning jump in Netflix, ended Friday up 115 points or 0.63% to 18,489 points. The Nasdaq Composite Index is now just less than 1% away from its all-time high on 8th of July at 18,671 points. For the trading week, the Dow Jones Index added a massive 412 points or 0.96%. The S&P 500 gained 49 points or 0.85%, and the Nasdaq Composite Index added 146 points for the period or 0.8% to finish the week. This marked the three indices' longest string of winning advances in 2024. Netflix, which climbed 11% on Friday after the streaming giant beat analyst earnings and revenue estimation in the third quarter, reporting a 35% jump in the ad-tier membership from the prior 3 months period. The latest retail sales number in the US last Thursday also increased 0.4% month-on-month in September, well above the 0.1% gain in August, beating market expectation of a 0.3% rise. More than 70 of the S&P 500 companies have reported their earnings this month. Of this company, more than 52 companies, or 75% of them, were above the market expectations. In Asia, Hong Kong stocks managed to snap a 4-day of losses as official data showing sluggish economic growth in China supported the case for the Chinese government to roll out additional measures to reach their annual economic target. Details of the Chinese Central Bank about the relending program for stock buybacks act as a catalyst for a rebound on Friday. The Hangseng Index actually surged 725 points or a massive 3.6% to 20,804 points, paring the losses for the week to just 2.1%. 80 out of the 82 members on the Hangseng Index actually ended positive on Friday, indicating that this is a broad-based recovery, at least in the sentiments. The Hang Seng Tech Index climbed 251 points or 5.8% on Friday and managed to regain the 4,600 handle as it narrowed the 30 stock index losses to just 2.8% for the week. China's latest GDP grew by 4.6% in the third quarter, decelerating from the 4.7% increase in the previous 3 months. The data was almost in line with projection of 4.58% growth by economists, with the China full-year growth target set at around 5%. Stocks in Hong Kong and China struggled to hold on to the gains since the end of September, when the Chinese policymakers signaled a massive stimulus to check on a slowdown in the China GDP growth. Investors are keeping a close watch on further fiscal stimulus that may come from the Chinese government heading into the final few months of the year that will help to improve domestic consumption and spending. Back in Singapore, our STI index ended the week on a positive note. Our benchmark index is up about 15 points on Friday or 0.41% to 3,640 points. For the week, our benchmark index also gained 66 points or 1.86%. Year to date, SCI is now up more than 12% and just 12 points away or 0.3% from the year-to-date high at 3,652 points. ST Engineering was the top gainer on Friday, ending up 2.1% or 10 cents to $4.81, while the biggest decliner was Wilmar International, dropping 0.9% or 3 cents to $3.28. So for this week's Technical Insights, let's look at the top gainer, ST Engineering. The previous time that we covered ST Engineering was in the 20th of 2nd July video, which is the period over here. You can click the link along this video to rewatch that analysis. We know that ST Engineering share price has been on an uptrend in the past 2 years, and the share price actually jumped more than 12% in the month of July. The indicators then were showing that the uptrend momentum was actually slowing, as the MACD line was converging towards the signal line. The RSI then was testing the 70-point overbought level, indicating a reversal soon. So with both indicators signaling a possible correction, our view then was that investors should wait for a pullback in the share price towards at least the May high of $4.26 before considering a long position targeting the year-to-date high then at $4.48. So you can see from here that we have already achieved that trading setup in the month of August. So if you're still holding on to ST Engineering shares bought at $4.26, what should you do right now? Firstly, the primary trend that we observed in the past 2 years is still intact, so there's no reason for you to sell now, at least until we see some overbought conditions from the indicators or the formation of lower highs and lower lows on the chart, signaling a change in trend. For investors looking to further accumulate on the ST Engineering, the green color line, which is the 20 days moving average that you see here at $4.66, is offering a nice support for the current share price now. And the blue line, which is the 50 days moving average at $4.57, will provide further support just like what we saw in the early part of September. On the indicators, we saw that the MACD indicator turned positive last Friday as the MACD line crossed above the signal line. This is a confirmation that the uptrend that we are seeing will likely continue. On the RSI, the latest reading last Friday at 66 points shows strong and healthy uptrend momentum and still have room to move up before we hit the 70-point overbought level. So with both indicators signaling that the uptrend momentum is likely to continue, investors may use the 20 days or the 50 days moving average at $4.66 or $4.57 to further accumulate on ST Engineering shares, targeting the handle of $5 as the next psychological resistance level. And these are the updates that I have for you this week. If you find the information useful, do remember to like, share, and subscribe to stay updated with the latest market developments. And I'll see you again next week in the next Technical Insights.